Good afternoon again. Thank you everyone for coming along to this afternoon's Masterclass, Monash Business School Masterclass this afternoon. Implications of audit regulation, do key audit matters matter? And it's absolutely fabulous to be your host this afternoon. My name is Richard Hall. I'm Deputy Dean Leadership and Executive Education here at Monash Business School. First of all, in addition to welcoming you, let me take this opportunity to acknowledge the peoples of the Kulin Nation, and in particular the people of the Wurundjeri group, on whose land I think many of us are located today as we come together virtually. Let me take this opportunity to pay my respects to their elders past and present. And indeed to welcome our very special guest presenting this afternoon's Masterclass, Professor Robyn Moroney. Robyn is Professor of Auditing in the Department of Accounting at the Monash Business School. She is, of course, very widely published in all of the leading journals in auditing and accounting, including Auditing, a journal of practice and theory, Contemporary Accounting Research, Abacus, Behavioural Research and Accounting and Finance. Robyn is also an editor of the International Journal of Auditing and on the editorial boards of most of the leading journals in the area. And so she's indeed really well positioned to provide expert commentary on this afternoon's topic, which really, I guess, comes out of the recent parliamentary inquiry into the regulation of auditing in Australia. And I think Robyn will be sort of asking those questions about, have we got it right? Are the current regulations actually working, and how could they be improved? And in particular, the recent introduction of the Enhanced Audit Report requirement and the effect of CAMs, the Key Audit Matters, and whether indeed these are living up to their promise, and if not, why not? So very much looking forward to hearing from Robyn in just a moment. Also, just by way of information, of course, I hope that many of you will have questions and topics you would like to raise. So please do so in the Q&A box. We'll be monitoring the Q&A box, which you will have access to. So please do record questions that you would like to have addressed or comments you would like to make in that box. And at the conclusion of Robyn's formal presentation, we'll have a good opportunity to address those questions and get her to respond, as I'll be able to put those to her. So thanks again very much for joining us. Very much looking forward to the presentation. And Robyn, please, over to you.
Thanks very much, Richard. Thanks everyone for joining us. We had planned for this to be at 5:30 in the city with wine and food to follow, but never mind, I hope you've brought your own. And we're having a lunchtime presentation instead. But before we get started talking about the topic that we're here to discuss, I thought I'd like to introduce you to some of my colleagues. Now, of course, again, the idea was that you'd see these faces in the audience and be able to have a chat with them afterwards and get to know them as well as me after the presentation. I still hope that one day you will meet these amazing researchers and be able to work with them and to help them with their research as they're developing their ideas. Sandeep Dole, Ashna Prasad, Sunyao Feng, Zining Zhao, and Rebecca Mattix. She's one of our PhD students. And if you notice that I'm being asked questions and I'm not taking any notes, it's because Rebecca's taking notes for me. I hope you're doing that, Rebecca. So why do I work with this amazing group of people? You'll see as we go through the slides that I work on different projects with different groups because of the different talents and skills that they have to complement my own. Yes, the Parliamentary inquiry into audit regulation. So by way of a background, and I know a number of people watching this today are aware about this Parliamentary inquiry, but nevertheless, not everybody will be. So I thought I'd start by saying a thing or two about the inquiry. So on the 1st of August 2019, the Senate referred an inquiry into regulation of auditing, and it invited submissions from a range of stakeholders. And a number of leading academics focused on the role of evidence to inform this process. They were very concerned about regulation for the sake of regulation, to be seen to be doing something, you know, when there's an economic crisis, when there's some corporate collapses, etc. In come the regulators, introducing regulation, and, you know, is it for a good reason? I remember being at a conference at the American Accounting Association back in 2005, And Michael Oxley of Sarbanes-Oxley fame was a keynote speaker, and he really spoke a lot about they probably went too hard. They probably brought in regulations that were, far too strict. That, Arthur Andersen didn't need to go, all of these things, and lamenting some of the consequences of the SOX legislation. But in being in such a rush to do something about, the problem at that time, these can be some of the unintended consequences. And of course, the market, the firms, etc., pay the price for those regulations. And especially where everybody is hit with the same regulation, even where people are doing the right thing, can be really problematic. Just like we're all in isolation, even though not all of us are doing a naughty thing in terms of, we're wearing our masks and doing the right thing, but everybody has to pay the same price. So what have leading academics tended to focus on in their submissions? They tend to talk about, which regulations are working well, which regulations potentially need to be changed, and which regulations should go. So an important message is to avoid introducing regulations for the sake of it, to use some evidence to back that regulation. Nothing's perfect, including research. We don't always get it right, and that's why it's important that we see a range of researchers attacking the same topics and then bringing different ideas together, and so we can have some kind of a consensus on the way forward. So it needs to be an ongoing conversation and discussion, and that's true with the research I'm going to be talking about today. None of it is definitive. I'm not saying this is, the solution to anything. I'm not saying that, we have all the answers, because we don't, but it's just to talk about some of the research findings at this initial stage. So when I did that slide and I had this holding slide set up, I thought, yep, the results of the inquiry are going to be released in early September, so it should be in time for my presentation. And that's in fact why I selected doing the presentation in this time. And then of course it's been delayed. It's coming out in December. So I'd have a really cool slide here. Instead, I have a slide which summarizes some of the preliminary findings, which came out in March, I think. You can remember, it's such a long time ago. But anyway, some of the recommendations are around ASIC's approach to and reporting of audit inspections, around clarification of fee disclosures for audit and non-audit services, list of prohibited non-audit services. And in fact, I've got a PhD student looking at these non-audit services and how shareholders are going to react to different disclosures, and whether the recommendations are likely to have the effect that is promised or is hoped for by the regulations. Explicit confirmation of independence declaration that no prohibited non-audit services are provided, prohibit incentives for audit partners selling their non-audit services to audited entities, disclosure of auditor tenure with an if not why not approach to retendering after 10 years to enhance that. This is all around independence and the perceived independence of the auditor. A formal review into reporting requirements in relation to prevention and detection of fraud and management's assessment of going concern, and a public statement by management of internal control effectiveness. That's not the whole list, but this is sort of a feel for it. So I think we've got some more presentations to the inquiry going on, I think in November, last time I checked, and then I think it's the 2nd of December that we'll find out what their recommendations are going to be. So what about my research? So again, this is by way of background, why have I ended up looking at Key Audit Matters in particular at this moment? So over the last 10 years, my research is focused, and this is with other people. So when I say, I've looked at this, I've looked at that, it's not alone. I have worked with an amazing array of fantastic researchers. But a lot of my research over the last 10 years is about, well, what are the consequences of audit regulation, and potentially what are some of the unintended consequences of that regulation? So we have ASIC's inspections. What's happened with the inspections? Well, what about the language that they use? How does it make auditors feel about their job? How does it affect the way that auditors feel about calling themselves an auditor, going home and speaking to their parents, etc., and saying they're an auditor, when ASIC is saying that auditors have failed and all of that kind of language. The areas of focus during those inspections, so a big area of research is around professional skepticism and ways of trying to encourage greater skepticism amongst auditors. And so some of my research has been focused on that. In relation to the inspections, it's interesting to look at how the firms have responded to the inspections, increasing the amount of rigour and prescriptiveness of their audit support systems. And again, how do auditors feel about that? The reduction of professional judgment in the audit becomes more of sort of a tick the box exercise. Where's the interest and where's the creativity that we used to have back in the day when I did audits. The argument around partner versus firm rotation, did a really interesting piece of research with one of my students a few years back, looking at, do shareholders actually have a different opinion about the effects on audit quality when there's a partner rotation versus a firm rotation? And we looked at a number of the drivers of audit quality that the International Auditing Standards Board put out a number of years ago, as well as some of the drivers from the research. And we found that the shareholders didn't care whether it was a partner or a firm rotation. They had the same view of what would happen to audit quality the next year. So why is there all this discussion around firm rotation rather than partner rotation to enhance perceived independence even more? When we told the shareholders that the audit fees were going up, they reacted. When we said that the audit fees would be going down when the rotation occurred, they reacted. They in fact think that audit quality goes up if the audit fees go up, because the auditors are going to do more work. So they reacted to something, but firm partner rotation, no. Rebecca, in her honours thesis, had a look at the length of the cooling off period. So we know that the cooling off period when a partner, with audit partner rotation, a partner can rotate back on. It used to be after 2 years of cooling off. Now it's 3 years and it's going to be 5 years. So we're in a transition period at the moment. And the idea is to make the audit partner more independent and improve audit quality when they rotate back on. Is that happening? What about audit quality during the cooling off period? So Rebecca had some very interesting results. That's a work in progress. We're going through the review process at a journal right now, but again, we found an unintended consequence that there's some evidence, very weak evidence of some improvement with audit quality when the audit partner rotates back on after a longer cooling off period. But the longer a partner stays on during the cooling off period, there appears to be some reduction in quality. So again, this unintended consequence seems to be a recurring theme. And so now we come to the topic of today's presentation. I'm already 15 minutes in. It's okay, don't worry, I'll keep it moving. But I think it's really important to have an understanding that, I came to this topic not in isolation, that I'm interested in it as part of a broader theme of my research, looking at the Enhanced Audit Report and Key Audit Matters. And in fact, I did some research when the new audit report was being mooted, in 2012-13, around there. And in fact, some of our results were reported up to the International Standards Board. We never published that because it appears they listen to us. So then the research becomes irrelevant because the audit report goes in a different direction. So what did the audit report look like? And this is a very broad sweeping overview. So essentially, the audit report used to have a discussion about the responsibility of the directors in the preparation of the financial report, the responsibility of the auditors for the audit report, of the financial report, a statement about the auditor's independence, their opinion, and then their signature, including their name and their firm. What does the Enhanced Audit Report look like? Well, first of all, a very important change is that the opinion has gone from the end of the report, it's right up the front, to make sure that it's really noticed, because that's really the important message, is whether the financial statements show a true and fair view. followed by the basis of the opinion, then the Key Audit Matters section, and I'll explain what they are for those who are unfamiliar with the Key Audit Matters. I'll explain them in a minute. Then the responsibility of the directors for the preparation of the financial report, responsibilities of the auditor for the audit of the financial report, statement of the auditor's independence. So you can see that, you know, some familiar elements there, but moved around and then signed by the name of the partner. So what are CAMs? They're those matters in the auditor's professional judgment that were of most significance in the audit of the financial statements of the current period. So you can see that there's some judgment involved here. It's not a one size fits all. And for once, the auditors are really communicating outside the bog standard information in the audit report and saying something that could be quite different and bespoke for each client, and really communicating to the shareholders. And instead of just saying something about what is prepared by the client, by the management, or those charged with governance, they're actually, you know, communicating directly with the shareholders for the first time. And this was really to try to remove some of the mystique around audits and what auditors do and what they focus on, and, you know, where do they spend most of their time, etc., to help shareholders understand more about the audit. So what does the literature say? So I'm just going to, I've put in here a couple of slides on some of the literature, it's some of the research being done by others. As I go through, I'm going to be highlighting which papers are published and which papers are not. And again, because if they haven't gone through the review process, and it's a bit like reading an unaudited statement, financial statement, it's still in its draft form. So it's a hot topic. There are a number of academic papers out here. And the first summary is around archival papers. And these are papers where they've gone out and gathered publicly available data from financial statements, audit reports, etc., and looked at the associations between different characteristics. So there's some evidence that in the UK, that the Enhanced Audit Report is linked to improved financial reporting, that investors do not appear to find the Enhanced Audit Report disclosure incrementally informative. In New Zealand, there's no link between Key Audit Matters, CAMs, and audit effort or audit quality. These last two haven't been published, but Clive Lennox is a top researcher and so is Mike Bradbury, so I'm pretty comfortable with their findings. And in Australia, there's no association found between the introduction of the Enhanced Audit Report and enhanced audit quality, and the non-Big Four are charging more. So I assume that means, I can't remember the paper now offhand because I did these notes a little while ago, but I assume that the Big Four are absorbing the cost of providing the EAR and doing that. So again, these changes in regulation are not costless, and that's why a lot of the recommendations to the parliamentary inquiry was to be very careful and mindful when you're introducing new regulation, because there is a cost associated. What about experimental studies? Now, experiments are what I love to do. So this is where you provide people with a scenario, something to read, and then ask them a series of questions, and you manipulate between the different people participating exactly what they're reading, and then you see whether the things that you manipulate, the differences between the cases, actually affect the way they answer your questions. So these US-based experiments, jurors, well, they didn't actually go in and, you know, walk into a law court and, you know, take hold of some juries. They're actually just asking people online and say, well, if you're over 18 or 21 or whatever it is in the US, you're old enough to be on a jury. So jurors perceive that auditors are less liable if they report a key audit matter on an account with an undetected misstatement than if they had not. So in other words, if you think there's a risk that your client could be sued for something, you should include it in a CAM, is the message there. Jurors, again, reaction to key audit matters depends on the accounting standard precision, the old rules-based versus principles-based standard argument. And we know that there's a lot of discussion between the US and the international standards because of the Americans liking rules-based a little bit more than the rest of the world. And investors' confidence in financial statement areas is lower when linked to a key audit matter. So it raises some doubt about the veracity of item that is included in a key audit matter. So what about my research? So is there evidence that the Enhanced Audit Report is fulfilling its promise? So the Enhanced Audit Report was introduced in response to concerns that the traditional audit report was no longer useful. It didn't really tell the shareholders much. So the Auditing Standards Board asked me to have a look at whether the financial report was perceived to be of value to the users of the financial report when there's CAMs. So do they value CAMs? So I asked Sun Yao and Zining, and thankfully they agreed to work with me on this project. Now this paper has been published. Still, it doesn't mean it's 100% perfect or that somebody could come up with a different response. There's always limitations in every study, but this has been published and been put through the ringer, let's put it that way, the review process. So we ran an experiment where participants were provided an extract of a financial statement, and that was held constant between all of the participants, and then an audit report, and we varied the different format that the participants saw. Now these participants were students at the university, and they were sitting in a lab doing the experiment. Now, if you want to know more about whether we should use students to do an experiment instead of using real investors, if you'd like to know more about that, then please put a question in the Q&A, and I'll talk about that later on. I'm happy to talk about the pros and cons of using students versus these online pretend jurors or investors at the end of a link on the computer screen. So what did those shareholders, pretend shareholders, students see? They either received an audit report in the old format, an audit report in the new format but no CAM, an audit report in the new format with 1 CAM, or an audit report with 3 CAM. Now, what we received the financial report from a partner at one of the Big Four firms who's on the Auditing Standards Board, excuse me, and then she also provided the audit report in the old format and then in the new format with 3 CAMs, and then we just took the CAMs out or added 1 back in and took her advice on which one to keep in. We made sure that the CAMs were pretty vanilla. They weren't really raising anything because we were interested, does number of CAMs matter, not the type of CAM or, you know, the issues or the risk, etc. So we didn't want to vary any of that. We were just looking at is more better. Another thing that we varied is whether the audit report was signed by a Big Four firm. So they got, you know, this financial statement data, then they got an audit report, and then all it said at the bottom was signed by a partner, a.partner was the name, not very inventive, and then Big Four firm or non-Big Four firm. We didn't mention the name of the firm. It was just Big Four or non-Big Four. Why did we do that? Because prior literature has shown that shareholders tend to value things that come out of Big Four firms rather than non-Big Four firms, rightly or wrongly, that the Big Four firms have greater credibility, rightly or wrongly, than the non-Big Four. And we thought, well, if our students behave the same way as those prior papers, then it gives us a little bit more confidence that they're acting in a way that your common variety shareholder might do. I actually think our students know more than other investors, but we can talk about that later. So we found no evidence, so really the old format was there as a control, just so that we could see, well, does new versus old make a difference, or is it the CAMs? And we found that the old format versus the new format, no difference. 1 or 3, does more matter? No, there's no difference in our results when it's 1 or 3. So our main results are reported for this no CAM condition versus whether a CAM was there. Whether it was 1 or 3, we just collapsed that data together. And this is what we found. Picture tells 1,000 words. So we asked the participants to rate the value of the audit provided on an 11-point scale. Now, it's important to note that they all said it was valuable, right? So we're talking about differences, not valuable versus valuable. It's just more or less valuable. And what we found was that for the Big Four firms, so this is Big Four, the shareholders, participants, perceived that the value was high, so there's a ceiling effect, and remains high whether there was a CAM in the audit report that they read or not. Whereas for the non-Big Four, they actually stand to benefit the most, where if their CAM was included, there actually is a statistically significant difference between the perceived value of the audit when it's a non-Big Four auditor. And essentially, this figure here, this point here, where it's non-Big Four and no CAM, is the lowest and statistically significantly different to the other 3 points. We also asked them to rate the credibility of the auditor, and that was in exactly the same pattern and the same conclusion. For the Big Four, it's already high. You provide a CAM, you're not going to gain more in terms of perceived credibility, whereas for the non-Big Four, the inclusion of the CAM, it gives these shareholders, we think, an ability to understand the value of the proposition, the credibility of the auditor, and to be impressed by the information they're providing and realise that these auditors have a lot to tell us about what's going on in the audit. Again, they're all rated as credible. It's not, that there's no credibility loss for any particular audit firm. Is there an unintended consequence? Yes, there is with CAMs. So we thought we'd just have an open-ended question. I like to throw in open-ended questions in my experiment, so I can sort of really get people just writing off the top of their mind, what's going on, what they're thinking about. And so we asked them about the audit report information that they relied on most when they were making those decisions about credibility and all those questions that we've just gone through. Now, it's important to note that the students couldn't go back, because they were students, they couldn't go back and look at the audit report again. They had to just do this off the top of their head, what they thought they relied on most when they were doing, when they were looking at the audit report and assessing the audit report information. What was concerning is that when CAMs were there, it's a bit of a distractor. So they were less likely to list the audit opinion and some other core information like the auditor's independence and those core elements that we talked about earlier that are elements of the audit report, both the old version and the new version. They tend to get lost when a key audit matter is there. So the key audit matter sort of increases in prominence, and there's less likely to be a note taken of the really important core messages to come out of the audit report. So here's the second experiment I'm going to talk to you about very briefly. This one is an idea from Soon Yao and a friend of ours at Melbourne Uni, Gladys Lee. So Soon and Gladys were interested, I say we, they asked me to come on the project after they already had most of the good ideas already in place. So they were interested to understand more about the factors that could impact how audit committee members interact with external auditors in the context of the new audit report and Key Audit Matters. And in fact, people are finding out about this paper, and it's the one that I'm most contacted about to send a copy of the paper to various audit committees, etc. This has not been published yet though, so please, this is preliminary. When we designed this experiment, we did it on Qualtrics, and Qualtrics is a platform where they can provide you with access to different user groups who will come in and do the experiment. And so we got through them access to directors, board directors, and audit committee members. Most of them were audit committee members as well. So we know that Key Audit Matters can relate more or less closely to an issue described in the notes to the financial statements. We also know that ASIC conducts financial statement surveillance and announce areas of focus. So we wanted to consider how Key Audit Matters similarity to a note, more or less similar. In our case, it was an inventory, it was a note around inventory, and the note discussed the valuation of inventory, and the CAM either referred to valuation of inventory or it referred to the existence of the inventory. So again, it's not that it was on a different topic or anything, it's just more nuanced, more or less similar. We also varied the salience of the ASIC's program. So it was either, there was an article about something, and it was either about ASIC's surveillance program and that an area of focus is inventory, or it talked about something else. So, and we were interested on how these two factors combined to impact the number of probing questions that the audit committee members listed that they would like to ask of the auditors, and whether they were more or less likely to support the auditors' key audit matter, draft key audit matter that they've gone to the audit committee meeting with unchanged, or whether they were going to challenge them and try to get them to change that wording or remove it altogether. And so here, this is the one, this is the box, this is the cell that's most different to the others. So we find that audit committee members ask the auditors more probing questions and are less, when the CAM is less rather than more similar to the note, and when the regulator surveillance program is made salient to them. So this cell is the highest. We also asked them to list probing questions for the manager, just to be complete, not just the auditor, and there's nothing significant there. So it's really only, they're only interested in talking to their auditor and quizzing them when the key audit matter is less similar to a note. Again, it's the same cell, but here it's the lowest. They're least likely in the same situation to support the auditor's wording of the CAM unchanged when the CAM is less similar and when the regulator is made more salient to them. So again, these are preliminary findings, but it's telling us that audit committee members do care about these things, and it does influence the way that they would behave and interact with the auditor. This final part of my presentation is around some data collection that we've been doing. So again, the previous two studies that I've just discussed are experiments. This next part is about a data collection that's been conducted over the last couple of years to create a database of key audit matters, and I'll explain that in a second. So in 2018, Sandeep, Ashna, Sunyao and I received seed funding from the Monash Business School to create a key audit matter database. And the idea is that this database would be available to other researchers, not just to us. And in fact, we've been talking with UNSW and ANU, who have been researchers there who have been collecting some of this data. And in fact, we received an additional $10,000, so $30,000, nearly $30,000 from the business school, and an additional $10,000 from ANU to gather this data. We're nearly out of money, and we're going to have to try to raise the funding externally. So if anybody watching has any ideas on how we go about that or would like to talk about that, very happy to discuss that later on. In all seriousness, I know that money is tight at the moment because of COVID and there's cost cutting everywhere. But the whole idea of the seed funding provided by Monash Business School is really to provide researchers with a starting point and on, from which to grow and gather some independent funding. So we've collected data for the top 500 companies for 2017, 18 and 19. We have started to go beyond the top 500 for those years, but as you get to smaller companies, then the data becomes a little bit more problematic to be able to gather. We're obviously very keen to gather the data for 2020. We're very interested to see what that's like, but as we know, there are some delays in the reporting season this year because of COVID-19. And so it's going to take a while until we see that data for the June 30 reporting season. So this data, first of all, it was collected by Rebecca, was one of the people who's led the data collection, and she's worked with two other PhD students who are top people, Eka and Prabhashi at Monash. So we really were very careful to hand collect who we thought would be, among the best. I'm not saying that the other PhD students are bad, they're excellent, but we knew that these people are really strong on being very careful and very precise in their ability to gather data from the databases. They're also, the three of them work very well together, and so we're discussing all along the way their method of collecting the data, interpreting the data and, and how they put it together under the very watchful eyes of Sandeep and Ashna. They kept a very close eye on that whole process. But this is unaudited as well. We haven't yet gone through and checked the work. So there's still, like, when we get more money, we can actually get an independent research assistant to come in and spot check some of this data and make sure that that there aren't any errors in here, etc. So ASX top 500 companies, why have we got 480? I asked that we only include in that top line companies that were in the top 500 across all 3 years. If we had 500, 500, 500, then it wouldn't be a comparison of the same companies. There'd be some changes in there. And so to make sure that we're comparing the same companies across those 3 years, we made that decision. With any data collection, any archival research, you lose some data because of, various factors. Here it's overseas auditors, ETFs, couldn't get hold of the CAM data for whatever reason, and we've noted all the reasons, and we've got a tally of what that is. But we do have data for 1,056. Now, let me assure you, I've read a lot of archival papers where this number is as low as like 100 or 200 out of 1,000, and yet they go ahead and analyse it and draw conclusions and say that that data is representative of the entire sample. So having 1,000 out of 1,400 is very good. It's excellent. So I think we can sort of get a feel for what's going on out there from that data. So you'll see these numbers coming up in the following table. So the 356, the 364, the 336, the 1056. So the first question is, how many CAMs are being reported? And from my discussions with, Auditing Standards Board and various partners over the years, everyone's telling me, it's usually 2 or 3, and they're right. So it's somewhere between 2 and 3. There are some outliers, there are some zeros, there's 1, 7, etc. But most are coming into that 1, 2 or 3, which really backs up why we used 1 or 3 CAM for our study when we were looking at, we were interested to see whether more makes a difference, because they are actually common numbers that you're seeing out there. So here's an overall look. So we've got the 356, 364, 336, the average across those 3 years. An important stat here is the standard deviation, which shows us that there's not a huge amount of variability going on. If that number was, sometimes I've seen standard deviations greater than the mean, which means that there's a huge amount of variability, but it's pretty consistent across those years. And then we thought, okay, Big Four versus non-Big Four is something that people are sometimes interested in. And you can see that, yep, Big Four firms do tend to report more CAMs than the non-Big Four. And that difference was statistically significantly different in 2017 and 19, but not in 2018. There's a bit of a picture which shows you the proportion of the total CAMs by industry sector. So 6% in energy, 16% materials, 10% industrials, etc. I'll let you look at that. You can see financials is where the largest percentage is for our data collection. Here are those industry sectors again. You'll see these numbers coming up again on a later slide, but you can see that all of them are in the 2s. So the mean number of CAMs is pretty consistent across those industry sectors. So we're not seeing any industry sector being an outlier here. So what are the CAMs about? Well, this slide shows you the topic areas that the CAMs tend to be about, what the CAMs tend to discuss. So you can see that most of them are on goodwill and intangibles, not surprising. We've had a new standard on revenue, so not surprising. There's a lot of CAMs there, investment, acquisition, and so on. So it tells you which accounts. Now, obviously, this is going to add up to more than the number of companies that we're looking at, because each company will have, on the whole, 2.5 CAMs, so on average. So the number of items or issues covered is a bit higher. This is my final slide. On this slide, you can see here's the energy materials. So those numbers are the same on the previous slide for the industry sectors. And just so we can see across those sectors, what are the accounts that seem to be discussed most for each industry. So each industry, there's a somewhat different pattern of the accounts being discussed. So no surprises, energy, exploration, and so on. So you can see there's a bit of variation there in the accounts across the different industries. And that's the end of my presentation. I look forward to hearing your questions and the issues that you're interested in.
Congratulations on the research, really great. Now, folks, we do have about 18, almost 20 minutes for some questions and for some virtual discussions. So I've got a couple of questions in the Q&A box, which we'll get to in a moment, but I do urge you to pop in there and add a question or indeed a comment or some observation that you might like to make. Would be really welcome and just fabulous. But as I say, Robyn, got a couple of questions already, so I might start off with those. I think really one of the ones I'd like to pick up on first was really a bit of a background to the story around CAMS for those of us who might not be familiar with it. I mean, the question from Morris is, was the GFC a trigger for the introduction of CAMS, or what do we trace the pressures, I suppose, for CAMS back to, as to where that can provide us with any insights?
Yep, so it did come post GFC, and I was on a number of roundtables like 2011, 2012 in particular. The International Standards Board did some travelling around the world to sort of find out what people think about the proposed Key Audit Matters and the Enhanced Audit Report. And yes, it was really about that whole thing. You know, the audit is seen as a credence good. Where, you know, there's a big black box, people don't understand what the audit's all about, and they thought that if they understood more about the audit and what the auditors have done, it would help them understand more about what's going on in financial statements. So it's about that transparency. Yeah,
and so a related question to that, which I can probably guess the answer to, but the question is, should auditors be encouraged to provide more recommendations to firms rather than those that just tick boxes? I mean, I guess that's part of the impulse here. I assume you'd agree with that sentiment.
Yeah, I mean, the big discussion in 2012 was really about for how long are CAMS really going to be informative? Because there was a concern then, and I think there still is, although I think COVID has sort of broken that, that the firms will start to have a one size fits all, like a boilerplate. So boilerplating was a real concern. So that, you know, oh, it's in investments, CAM, you know, and you trot out the usual investments or whatever it is, Key Audit Matter, and say the same kind of thing. I know that with COVID, you know, there's a lot of discussion. I'm on roundtables to talk about that, and, you know, really important that the firms don't just come out and say, oh, COVID, and so there's a lot of uncertainty. It's like, well, duh, we know that. So it's about actually providing that bespoke and nuanced information. And so it's really important that Key Audit Matters remain informative about that company, etc., so that the shareholders stand to learn something. The risk is that we could move away from that in the longer term, though.
If I might indulge just on that, do you have any specific ideas or insights as to how we can stop that? What to me is not knowledgeable, but seems almost inevitable that it might descend into that sort of boilerplate standard response.
I think it's got to come out of the shareholders again. Just like the reason that we've got the Key Audit Matters is because shareholders took a stand and said that they wanted them. So I think it's really got to come from the shareholders saying, look, this is no longer informative, etc. I don't know that you can get a regulator to say that. I think the firms are very aware of that from the ones that I've spoken to, the partners I've spoken to over the years, and so on. And they're very keen to make sure that they're being informative, but then, you know, they have to be careful they're not sued for something they say as well. So it's sort of, it's a bit of a fine line to walk, and I can fully understand.
Yeah, sure, great, thanks. Back to some questions from the audience. This is an interesting one. I'm not sure if you'll be able to respond to it, but one of our attendees is asking whether there are any unique features about the Australian CAMS regulations compared to there are similar regulations in the US, the UK, and the International Standards Board regulations. So is there anything distinctive or unique about the Australian set?
There's members of the Auditor Standards Board on this who registered to come along. So they're probably in a better position than me, but my understanding is that we follow the international standards in area, which is why when the International Standards Board came out to talk to us in Australia, it was with the understanding that we would be following the way that they articulate what key audit matters are. So in Australia, we tend to be, we tend to take the standards from the international standard setter and then adapt them for Australia.
Right.
So
Okay.
they're in line with the internationals.
Great. We've got a comment here actually from Anne Waters just on that one. The UK have more reporting on CAMS than the International Standards Board there. So that's an interesting one. Just an interesting question here I'd like to pick up, Robyn, about, I think this one is really about the content, the subject matter of the CAMS. And I suppose, even from my eyes, didn't seem to be too many shocks or surprises there. We've got a question here from Les Pickett. G'day, Les. Any input about human resources, which I think might be a question, actually, Les can correct me here, as to whether that features in any way in the things that are subject of CAMS?
Not that I've seen, but that's probably a question more for Rebecca, if Rebecca can come in and answer that.
Yeah, sure. We'll give some time and opportunity there if Rebecca wants to come in and see if she can shed any light, in particular on that question about whether HR matters feature there at all. We have indeed got a question here about, again, another research question which you might want to defer to your team, Robyn. The reason students were used rather than prospective shareholders for your research study.
Yeah, I can answer that one.
Could be one, but yeah, great.
That's one for me. So it's interesting, like when we use our students, and obviously at the moment we can't do this, but the advantage of using students is that they sit in a computer room and it's called a controlled experiment. So we have somebody who does an introduction and says exactly the same thing to one group versus another. They have really no incentive to take part except that they get 2 marks, but they can get those 2 marks doing another task. So they're really coming for the right reasons to come along and do this. And because it's a controlled experiment, we know that the phones are away. We know that we can see what they're seeing on the screen. We know that they're not cooking dinner at the same time. We can't control what they're thinking about, the footy the next day or whatever, but we can control what's on the screen, what they're looking at, what they're reading. And so it gives you greater control and a greater sense of more confidence in the causality that, what you're looking at or what you've manipulated between the different groups is driving your results. I still get criticised from time to time for using students. So I do use shareholders online for some of my research. But really, what qualifications do you need to be an investor? None. Any of us can go and buy shares. Sure. With those online investors, they could be looking at their phone, they could be making dinner at the same time. They could log on and say, yes, I'm an investor, and then get their brother, sister, cousin, whatever to answer it and so on. So you have less control under those circumstances. So there are pros and cons of using each. And, I do have to defend much more keenly when I use students than when I use the investors. Rebecca.
Yeah, hi. Just in relation to the last question about the subject matter of CAMS and whether or not they're related to human resources and such, not that I have come across. It doesn't seem to be a key issue that's discussed as part of the CAMS. Potentially in the future, maybe 2020, we might see that coming through. But as far as the 2017 to 2019 data is concerned, it's not something that's come up.
Probably reflecting the subject matter of most financial reports, I guess.
Don't go away, Rebecca, just in case there's another one like that.
Sure.
You've got your hands on all the data, so it's better that you answer them. Thank you.
Yep, no worries.
Thanks. Just going to jump to another one here, Robyn, interesting one about the question as to why the number of CAMs per se actually matters and what's the implication of the number. The question being put here by the attendee is could it be used as a proxy for audit quality? While you're at it, I've actually got a related one, which is I assume there is no obligation on the auditor to include a CAMS, and yet it struck me that virtually all did. Presumably because they feel, I'm guessing, because they feel under some expectation now the provision is there, I can't charge the same fees. Just call me skeptical, but I'm just putting that one in there. But anyway, something about the number.
I think that factor is definitely one of them. I mean, on those roundtables, interestingly enough, when in the pre-CAM era, I remember sitting on some of the roundtables with audit committee members and them saying, I could tell you now what would be a key audit matter for our organisation. So it's not going to surprise me what the auditors include. There are certain things, there are certain areas that the auditors focus on. Look, we've got a whole lot of research that we need to do yet around, if there's more for one company in an industry versus their competitors, does that matter? There's a whole lot of things that can be looked at. I won't go into all the details and bore you with it. For us, we found that for the value of the audit, it doesn't matter whether it's 1 or 3, right? So that the number didn't matter. But would it matter for perceived audit quality or something like that? We haven't looked at that. So yeah, that's a different research question that we haven't looked at yet.
Yeah, great. Okay, thanks for that. Okay, I've got quite a few coming in. I'm going to jump as best I can to this comment, if I can, from Michael Kend, who says, research on CAMS helped investors focus better on the key risks. Should it then be a concern that it may distract from the other parts of the audit report, which I think we did mention? Should not CAMS be complementing that other information, like the audit opinion, going concern, etc.? Any comment on that?
Yeah, g'day Michael, good to have you here. Yes, look, I agree. I mean, you would hope it would be complementary, and potentially it was a distraction because, don't forget, for these participants, they were students, but also this would be the first time that they're reading audit reports with Key Audit Matters. So they're potentially like, oh wow, what's this new thing? And they focus on them, but potentially in time, when people become more accustomed to reading the audit reports, reading the Key Audit Matters, etc., and then understanding or having a better understanding of where they fit into the overall report, and that it's not the only part of the report, it is a component of the report, and that it should help them to read the financials as well as the audit opinion.
Yeah, great. Okay. Here's another interesting one. In the CAMS database, did you identify instances where CAMS were potentially being used incorrectly? Were they used in place of a MURG?
Yeah, okay. I mean, Rebecca can't even answer this. We don't know. Like, I mean, I've suggested for Rebecca to look at this as part of her PhD, to look at what, various topics, whether they are a material issue or material uncertainty, I should say, or whether the same thing is included by another company as a key audit matter. But we're not, in a position to judge. We'll leave that to ASIC or someone to judge, whether it's been used appropriately or whether, whether it should be one or whether it should be the other. We can only report on what is there, what the decisions are, and we have great faith that auditors know what they're doing.
Sure. Okay. Thanks. And Waters again is I'm afraid suggesting some more research, I suspect, for you to do. Have you done any research, he asks, on whether CAMS are changing each year? I guess you've got the 3 years so far in the database. So it seemed to be pretty similar, but any comment on change year on year?
Yeah, no, we haven't done that yet, but that's definitely something that we're interested in looking at. And as I said, like, within an industry, if all of your competitors have a CAM on, blah, why don't you? Or if you're the odd one out, in other words, does that matter, and so on. So yeah, we're very interested in looking at that as time goes by. Again, because we've only got that few years data, there are potentially others who are looking at that as I speak, because the data isn't sort of only for us. Other people are looking at this, and so that research could be going on, but we haven't looked at it yet.
Okay, thank you.
Can I just say, I think COVID's going to be a big, sort of like the odd year, perhaps a couple of years. So it's going to throw us out in terms of being able to look at some trends, etc.
Yeah, might be interesting what happens there for this year's reports. Eric Lee says, great presentation. Robyn, do you think that the usefulness of CAMS may be different between, for example, a not-for-profit and not-for-profit entities, including public sector?
Yeah, that's really interesting. In fact, one of the projects that I've just done with Zining and Sunyao and a friend of us up at UNSW is to have a look at financial versus non-financial. So we haven't looked at not-for-profit per se, but we did find that shareholders, and this is one of the ones where we did use an online service, so we use real investors. We did find that they did react to the Key Audit Matters differently. I won't go into all the details now because it would take a while to explain and set it all up, just as I had with my other experiments. That they did react differently when they were more familiar, and in other words, the financial context versus the non-financial context. And I think that if we had Key Audit Matters in a not-for-profit situation, we shouldn't assume that shareholders or that stakeholders, I should say, in the not-for-profit area would respond in the same way as they would in a financial context. I think some care needs to be taken before anything like that's introduced. Yeah.
Great. Couple more if we can, Robyn. Doing a great job. Thank you. This one I'm quite interested in too, from one of our attendees. How do auditors determine CAMs? I mean, does the auditing standard actually prescribe anything around the procedures and the methods, or is it just in their professional judgment?
It is their professional judgment, and as I said, through the discussions with the audit committee, that they would probably know about what the key areas are as well. It really is up to the partners to determine, where did we spend most of our time? What should we be telling the shareholders? It's also, when you look at the Key Audit Matters and the way that they are disclosed, like we've done some research on, when it's more or less readable. So in other words, there's different styles. Some of them include numbers, some of them don't. Some are, longer and more detailed. Some are shorter. Some go into quite a bit of detail of the audit procedures used, and some of them don't. So there is, quite a bit of variability out there in terms of what the CAMs look like. So as much as we provided some data on the high level stuff in terms of the topics, etc., even within those topics, there's a lot of variability in terms of what's discussed, how it's discussed, the level of detail provided, etc.
Yeah, a little bit on that. And Waterscan notes that another change that was the opinion first. Yes. And wondering whether that may be stopping people reading the entire opinion.
That's a really good question. I think our research, which Anne asked us to do around the value of audit, that project, would tend to suggest that because they read the Key Audit Matter and they saw the Key Audit Matter and then they didn't list the opinion as something that influenced their judgment or the way that they answered the questions, tends to tell us that they actually did go on and read it. But that was in a laboratory, computer laboratory. They couldn't go off and do something else. They couldn't be bored and sort of say, oh, well, I'm not going to read the rest of the report. So in the real world, what happens? Yeah, I don't know. That's a sort of an open question.
Fantastic. I've just got one more, which we'll close with, given the time, if that's all right, Robyn.
Thank you, Rebecca.
I think it's a cracker to finish on, actually. Like, in your opinion, regarding a cost versus benefit analysis, at the end of the day, are CAMs worth the investment, worth the costs? Yeah.
I can't answer that. I mean, what we have shown, our research does show that the shareholders do value them. And when we asked them about the value, we did actually couch it in, the audit fees are X amount. So they, sort of reminding them, so do you think that the auditors provided a good value audit? And it does show that when the CAMs are there, they do value it and they do find it worthwhile. I guess it's more of a question for the firms in terms of the amount of time and money they spend in crafting these. And that research that I put up, that was done by somebody else around what happened to audit fees with the introduction of the Enhanced Audit Report. So it looks like the non-Big Four are able to recoup some of that, but the Big Four are not. But that's, again, it's an unpublished paper and it's preliminary. And it's not my research, so I can't really say much more about it. But again, it comes back to my early slides, that regulation is not costless. This is costing money. It will work its way out to the shareholders and others eventually. Our research shows that they do tend to value it. Other researchers, some of them find that there is some value in it, others that there isn't much value. So, I guess the jury's out on that at the moment.
Robyn, look, thanks very much. Fascinating research.
Thanks, everyone.
The the sobering news is you've clearly got a lot more research to carry on with. Congratulations on the database, the insights, and it's incredibly relevant and timely research and work that you're doing. Thank you so much for these insights today. Before we let you go and I formally close off, I would also like to take this opportunity, if I could, to thank you all for your attendance and for coming along. I do want to thank the Monash Business School support team, in particular Deb Mordek, who does incredible work in helping bring these masterclasses to fruition and to so many people, and for making it such a painless process. So thanks to Deb and the whole team there, Kerry Allison included, and everyone there at Monash Business School Engagement who puts these things on. Folks, before you go, great to have you at this masterclass today. Please remember the next masterclass, that's 29th of October, Carly Mulang and Alessandra Gio, on the really interesting topic about mental health, wellbeing and performance in professional service firms. So that one will be, I think, a real cracker as well. Ladies and gentlemen, thanks very much for your attendance this afternoon. Stay safe, stay well. Thanks very much for your ongoing support of Monash Business School, and we'll hope that you can attend our next masterclass as well. So bye for now. Thanks again.